Sell in May and go away. That has been the narrative here for the month of May. Certainly we've seen that play out on multiple commodities so far this month. This has in fact provided massive opportunities on oil, on platinum and also palladium to be building in positions at the swing lows, then capitalize on the slingshot moves higher we've seen later on in the week. In fact, just within the last 24 hours, we've taken the opportunity with oil to build in two additional positions down towards $77 per barrel. In under 24 hours, we're already up over 500 points on two new positions on crude oil. So of course, you know that calculation. Every 1 lot contract you'd be trading, that's $5,000 of profit. Every 10 lot contract you'd be trading, especially if you stacked into the trader, that's going to net you over $50,000 of profit. The trap was all set. We talked you through this over the month of April. Essentially, speculators, many had FOMO'd in to oil, to gold, to silver, to platinum at much higher prices. Typically, they'll get punished for doing so. As such, many of these commodities, including crude oil, they have taken the elevator down. Over the last couple of weeks, oil prices, they broke out to $87 per barrel. They touched $77 per barrel just yesterday. This, in fact, was a 1,000-point sell-off or over a $10 move from the high to the low. Essentially, this rug pull on oil liquidates many of the late trend trading systems that got in too late into the move and therefore provides us with a massive opportunity to get in at the swing lows, exactly as we discussed with you on the week ahead commodity report. Look at opportunities to buy in on retest back down towards those March lows. That's exactly what happened over the course of this week, with oil prices gifting you another opportunity to buy back in $10 lower than the price was just a month ago, buying in at $77 per barrel. So congratulations to everybody who also capitalized on that move. Right now, oil prices, they're just under $80 per barrel. We've seen an impulse move over the last 24 hours. Now, alongside that, we've got platinum, which is trading just below $1,000 per ounce. Now, you know the mantra on platinum that we've been discussing with you over March, over April, big buy opportunities down towards $900 per ounce. What you want to look out for as well is when platinum and palladium prices, they reach parity, which is essentially what happened at the end of last week. And with that, this is where we stacked into further positions on palladium. And we saw at the beginning of this week, palladium was breaking out over 3% to the upside. Again, just touched under $1,000 per ounce. I do like palladium here on any retest back down towards $900 per ounce. I don't know that we'll get it, but if we do, I would suggest that would be also a fantastic opportunity to add to our portfolio. Platinum, that ship has sailed. It's already trading back towards $1,000 per ounce. Now, as it relates to gold and silver right now, as we expected, they continue to consolidate. So we're in the month of May. As we transition into next week, the next catalyst for explosive moves, typically on those precious metals, will be Wednesday's CPI data. So right now, we still maintain our position on silver, down at $23 per ounce, and our positions on gold, sub $2,000 per ounce. Silver at the moment is leading. It's up almost 5% so far this week. Gold prices, they continue to tread water and consolidate around $2,320 per ounce. But the real star so far this week has been platinum, then palladium, and of course now, later on in the week, we've seen the breakout with crude oil, which was a very straightforward opportunity for you to capitalize on. Just go and look at the chart. We flushed back down towards the swing lows. It's taken out all of the speculator positions there, grabbing the liquidity from the March lows, then slingshotting higher with a bear trap in the opposite direction. And crude oil right now is pumping. So with that, of course, this comes down to utilizing a professional, research-driven approach. Definitely ditch those outdated technical analysis strategies and gimmicky technical indicators, because those will give you absolutely zero edge. It's 2024, the age of data. This is where you want to utilize data, statistics, market intelligence, then learn and understand the daily, weekly, monthly, quarterly, real-time, data-driven cycle for each commodity. Further compound that as well with the intermarket correlations, the ratios, the capital flows in the market. So essentially how the hedge funds, banks, money managers, the institutions, how they're all positioned in the market in real time, then further compound that as well with the key areas of liquidity to get your sniper entries in, knowing when to bank your windfall amount of profit. Then, of course, learn and understand the fundamentals, the macroeconomics, the geopolitics and the narratives in the market. All of this combined is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.